but then when you actually, get your trading plan out, cross-reference that to your plan and be like, yes, that was within my plan, regardless of how that played out, whether it was a 5% trade, whether it was a break even, whether it was a 1% loss, I still stuck to my plan.
I know it's gonna hurt, but you're worth fighting for.
Real quick, 2 things to mention before we get into the bulk of this video. 2 questions. So I get this question a lot. What platform am I using to do my trade journaling on? This is called Notion. So simply all you need to do is go into Google, download this for free. It's easily downloadable. You can literally do it in 2 minutes. So check that out. Secondly, I get this question a lot of people trying to replicate this template. You don't need to. I've done it for you. So go in the description of this video. There'll be a link to a Google Drive linked under free resources. Check that out. You can easily save that to your own drive and use that for free. So check that out. The work's taken out for you, and keep me updated with how you get on with this. If you find this template helpful, let me know. Tag me on Instagram or drop a comment down below in the comment section and let me know how you're getting on with the template, and that allows me to keep track of that. And if I can improve the template in any way, I can do that. So hopefully that helps. Now getting into this. So as you can see, separated in an efficient way here. So I've got Q1, Q2, Q3, and Q4. So as we are in right now, Q1, and the reason I've separated it into quarters is, once again, just that long-term mindset coming into play. I don't really try not to think month to month. It's more so quarters, 6 months, and annual. Because if you talk to an investor, you talk to these bigger people within the industry, they always talk about thinking on that longer term basis, thinking in quarters. And you go talk to an investor, they're not interested in monthly returns. They're interested in quarterly returns and the annual figure at the end of the year. So hence why I've just done this. Keeps my frame of mind in the right place. So as we can take a look at this, so let's take a look at January, because February hasn't ended yet at this point at the time of the video. January. Now, 2 key sections to focus on here. So I separate each month into the first half and the second half. Then we've got a little section on here of basically the overview of the month. So how many wins, how many losses, how many break-evens, total trades, and then net profit or loss. And I get this question a lot of, is this the only way you track your trades? Definitely not. So I have essentially 2 parts of how I track trades. So you've seen on previous videos how I have my, a spreadsheet that I use to track more so specific data. So that's more so things like strike rate, my average, high prob setups to valid trades ratio, and just the individual trades, the profit and loss of those trades, the percent of those trades, which is obviously linked back to the broker as well. So that's more of the data check towards my trading. This is essentially the lessons behind each trade, the screenshots, the documentation of that. So hopefully that clears things up. And then I separate it into another part. So we've got the overview of the month and any key focus points that I want to bring into the month ahead. This is why I highlight these here. And I put it here just so it's easily accessible and I could just go back and give another read of this. So as you can see from this, I took 3 lessons away from last month. Stop loss placements. So on a couple of trades here, I've had my stop loss placement tighter than it needs to be. Therefore, this is a perfect point where I should be taking a step back, realizing what got me consistent in the first place and keeping a safe stop, giving price action more than enough room to breathe and develop. So that's a key point there. Not being too tight, not being too greedy, focused on the price action, focused on the structure. Second point is management. So make sure to manage each trade according to my trading plan, knowing the management style of each individual position before entering the trade. This is going to increase confidence further and allow me to act in accordance with my plan. And then finally, routine. So routine's got to be one of the biggest things in regards to peak performance for myself personally. So just keeping a check on that, making sure that all those processes and habits are in place is vital, especially at scale, especially as I scale up. Key point to mention here as well, right? So I get this question a lot in regards to, do you take trades every day and how many trades do you take per week? It completely depends. Let me explain. So in the first half of the month, we can see that I took 7 trades. In the second half of the month, how many did I take? 0. Now, why is that? Well, clearly dependent on the market conditions, I do not take trades every day, nor do I take, 3 trades every week or 4 trades every week. It's completely dependent on the market conditions at that time. So we could have a corrective couple of weeks, for example, hence why I haven't taken any trades here. But then the impulsive market conditions kick around, I take 7 trades in 2 weeks. So as you can see from this example, it clearly depends on the market conditions, and you can't be so, dictated on the fact that we should have this many opportunities in January, or, if I don't get 8 trades in the first half and 8 trades in the second, then I'm not happy. You can't put your expectations on the market. You have to sit back, relax, and actually trade your strategy and not force things. So taking a look at the first half, as you can see, just the data here. So this is a question as well, like, I think, something that a lot of beginners would ask is that, can you have, let's say, for example, a 50-50 strike rate and still come out profitable? Yes, you can. Why? Because here, for example, right? So I've taken 2 wins, 4 losses, 1 break even, taking clearly more losses than wins, but still come out on top with just over 2.4% profit, right? So say, for example, out of those 2 wins, you bank 3% profit on each, suddenly you're up to 6% profit, minus the 4 losses is 2% profit, so you net 2%. So that's how the probability model plays out, and that's why you do not have to win every single trade. It's more so the probability model and your edge playing out over the course of a series of trades. So that's key. So here's how I like to separate my ASR. So we've got a little summary once again here, the overview. So just a little overview of how the month actually went, alongside any lessons once again from the first half of the month. So what we've got here, remain consistent to my ideal high probability to valid trades ratio at the 80-20 mark for maximum efficiency and peak performance. So the fact that I've already highlighted that lesson tells me straight away that I finished the first half not ideal to what I was wanting to in regards to the 80-20 rule. So let's say, for example, I finished on 60-40 and I was looking for an ideal ratio of 80-20. That's just something that I need to work on. Remain consistent with my prior trade process of running through the questions. So if you go back to my evening, what's that video called? Evening routine of a Forex trader video, I pointed out some of the key questions that I asked myself prior to getting involved with each and every trade. So here's what I'm referring to here, just stay consistent with that process, making sure that's in place. Here's where the data comes into play. So very simplistic. The symbol followed by the direction, $1 short, the date of the trade. So this was actually taken on the 31st of December 2019 and held through the new year and closed on the 2nd or 3rd, I believe. So that is key. Entry type, grade of setup. So in this situation, this was a high probability trade, and then followed by the profit or loss, which is 3.44%. Little head checklist here that I usually have after I've taken each trade is, was this trade forecasted, and is this trade congruent to my trading plan? The reason this is important, right? Say for example, I took 2 trades in a row and I hadn't forecasted it and it wasn't congruent to my trading plan. That's then a red flag in my eyes to be like, well, I've taken two out of 2 trades, I've not forecasted them, they're not congruent to my trading plan. Why did I take that trade? I shouldn't have taken that trade. So then you dig into, well, why did I take that trade? Was there anything going on in my life at that point? Was I dealing with stress? Was there any external influences that were coming onto me? Was I distracted? Was I not in peak performance flow state? Like, you get to the root cause of that, and then you can tweak that. Versus being, took a bad trade here, took an average trade, moving on, taking the screenshots, doing the scratch of the surface work, and then moving on and not actually learning from the lessons. The key part with this ASR, the reason why we do it is, number one, accountability, to keep track and up to date with your trades, so that if you do want to scale, or as you treat it like a business, you scale and track everything. But then secondly, to take away the key lessons and actually apply that into your trading going forward, which is the main thing. So following on from that, that's a very key section. It may look very simple, but that's a head check that I always keep in my analysis. Here we can have a trade analysis section. So this is where I like to keep it very, very simple as much as I can. And we can see all I basically do here is run through some higher time frame analysis to lower time frame, and then how I got involved in the trade. So here you can see, use the 15-minute, set the order below the phase line before being taken into position shortly afterwards. So that was that. So I like to set entry orders. I don't really take more so live market orders. It's more so entry orders, letting the momentum trigger me into the trade. So as you can see here, setting the order, that is what I meant by that. Psychology. So this is a key part to mention as well. Now that I've got things optimized, now that I'm in a little bit of a different stage within my trading and I have different focuses, this is a lot more simplified than what it used to be. If you go back to my old video when I highlighted this, it's a little bit more in detail. There's a few things that I needed to tweak back then, and I was going through that whole self-sabotage, limited beliefs period within my trading. So naturally, I'm keeping more of a track of my psychology back then. But here, maintaining that, making sure my psychology is good. If not, then why not? You know, you need to dig into the little nitty-gritty details. If my psychology isn't good, what's my life looking like? Like, do I have any distractions? What's my mindset like? Have I had any external influences come into play? Like, you need to dig into the cause. So that's the key part with this one. Lessons here. So taking away the lessons learned. Now, there's not always going to be, as you can see from this trade, there's not always going to be specific lessons that you can take away from every single trade, but it's good to highlight that because plenty of time there will be some key lessons. So if we just have a look at some other trades, here we go. So as you can see here with this lesson, be aware of outcome bias. It's very easy to look at the trade in terms of its result and base the trade from the quality this is. So you have a look at that, right? So key lessons to take away, but there's not always going to be key lessons to take away. So that is key. Next, I'll highlight just a little section on how I actually manage that trade. Did I manage it according to my plan? If not, why not? And if so, great, continue doing what you're doing. So as you can see here, I would manage the same trade in the exact same way again. So that is key. In regards to the forecasting, so once again, you've seen my previous videos where, let's just do this right now actually, real quick. Let's just do this right now. Right, so in regards to my forecasting, this is where I track everything. Right, so let's go to the 2nd of Jan. As you can see, these key screenshots here. So tracking what that trade is it go-to setup, is it high prop, and then actually forecasting that trade ahead of time, right? These screenshots then get downloaded. So it's almost a head check because after I've taken the trade, I'll then refer back to these documents and then be like, yeah, that trade was forecasted, let's download that. I don't like download the daily chart, but it's more so the lower time frames. So yeah, let's download that. Cool. Let's put that into my ASR. So then I go back to my ASR. Right, back to the ASR. This is where these screenshots come into play. So as you can see, it's already accountability for myself, which is the most important thing. If you can't be accountable to yourself, forget being accountable to other people. Be accountable to yourself first, which is the most important thing. So here we go, daily chart. I like to focus on a screenshot with a higher time frame structure, just to outline exactly what I'm looking for, and then the lower time frames, as you can see here, in regards to the actual entry. Then we've got screenshot. Let's try and say that properly. Screenshots prior to that trade developing. So once again, daily chart, 1 hour chart, and the 15-minute in this situation, and then the screenshots after the position. So after I've been taken out for a profit, a break even, or a loss, then screenshotting that. And a key detail to point out as well. Say for example you work a 9-to-5 job, you can't always be at the screens at the time of the trade. That's fine, I can't either. All you simply do, there's a little feature on TradingView, allows you to replay current price, go back to the initial at the time of the entry, and then screenshot the trade. So super handy if you can't read the charts at the time of the trade. So that is important. Just a quick point to expand on that as well. Just because you can't be at the charts at the time of trade doesn't mean you can't set an entry order a few hours before, depending on your style obviously, and then simply set and forget. So it depends on your strategy and your style of trading. But for the way I trade, I can simply, in the right areas with different setups, I do have the possibility of actually setting an entry order, and then it may take a couple of hours to actually play out. So that's how I approach things. So that was the first trade. As you can see, that's the key section there. So very simple. We have got a few screenshots, but keep it very simple, very specific, very to the point, and then I extract these details. So on the lessons and the psychology, I will extract those details and put them into, the overview part here. I'll put them into here if needed at the end of the month, if there are some key details with that. So that is key. And then simply, we've got different trades. So that's the first one. Second one was CAD Yen. Third one was Aussie dollar short, valid trade, 1% loss. Here's the key as well. Just this is going slightly off topic, but it's about not becoming too outcome biased and making sure that you're actually focused on the probability model and the process itself. The reason why I say that, it'll be so easy for me to take a look at a 1% loss here, right? The fact that it's a valid trade as well, and be like, you know what, it was a valid trade, I took a 1% loss, should I have really taken that? But then when you actually, get your trading plan out, cross-reference that to your plan and be like, yes, that was within my plan, regardless of how that played out, whether it was a 5% trade, whether it was a break even, whether it was a 1% loss, I still stuck to my plan. And over the course of the long term, we're talking quarters here, that edge within the market is going to play out, which is the most important thing. So yeah, just wanted to mention that point here. But as you can see here, tracked every single trade into the little details. And it's just an efficient process. I will literally sit down on a Saturday morning, ideally a Saturday morning anyway, before I get into my big weekend analysis, do all this, make sure this is all smashed out. So trades that I've taken, and then missed trades as well, which is going to be featured in the next episode, which is going to be very key as well, especially when you see both and how they coincide with each other. But in regards to this, I'll do this and the other process on a Saturday morning. It's usually done before 10 a.m, 11 a.m, before I get into my analysis, and this allows me to then bang out this process without, being too focused on the week ahead. Focus on the past week before I focus on the future, the next week. So that is key. That's my process in itself. Pretty simple, as you can see, but pretty efficient as well. Like, I've spent so much time making this more optimized, making this more efficient, making this simplified, not overcomplicating things, and just optimizing the entire process. So, like, the amount of times I've sat down and be like, yeah, let's try and optimize this further, redeveloped it entirely, done the same thing over and over and over again. So happy with the way this is right now. So as I said at the start of the video, this is all for free down below in the description below for you to use. So definitely check that out. So hopefully that helps, and hopefully you enjoyed the video. Make sure, if you enjoyed my content, to click that subscribe button and to click that notification bell to stay notified for new updates. The reason being, if you don't, then you're probably going to miss new episodes, so it's going to be good for you to keep on track and never miss a video that comes out. So hopefully you enjoyed the video. Catch you on the next one. The next episode is going to be very, very key, because you're going to see how this process comes into the next process and how they link together. So hopefully that helps. See you guys in the next episode. Speak to you all soon.